it just so happens that at the start of the show, we're able to address the latest numbers from the Association of Mutual Funds in India. And now this is, of course, the data for the month of June. And as a whole, for the industry as a whole, there is an outflow of 43,636 crore rupees. And this is on account of a very large outflow in fixed income. And this is usually the case at the beginning or the end of a quarter. You will generally see quite a lot of fluctuation. But pay attention to the equity flows, because that's where the magic has been happening. You've got inflows on a consolidated basis into actively managed equity schemes of as much as 40,608 crore rupees. And once again, you're seeing a very substantial amount of inflow into sectoral and thematic funds. As of last month, as of the month of May, this particular category became the second largest in the actively managed equity category. And these include things like your defense fund, they include thematic funds like the manufacturing fund that HDFC launched. You have consumption funds, you have banking and financial services funds. That as a whole has seen inflows of 22,351 crore rupees just in the month of June. There are a total of 172 schemes in this category. Now, look at the other inflows as well. You have inflows in the multi-cap category of as much as 4,708 crore rupees. Large cap as a category has seen inflows of about 970 crore rupees. And the fact that it is an inflow is heartening to see. You have the small cap category, which has once again seen substantial inflows, but less than there has been in the past several months. It has come in at 2,263.5 crore rupees for the month of June in small cap actively managed funds. Mid cap actively managed funds have seen inflows of 2,500 crore rupees, and large and mid cap as a category has seen inflows of about 2,900 crore rupees. Now, I'm just trying to get you details of the schemes that were launched or the inflows in new fund offers, and that is a substantial chunk of the total inflows into equity. There were 9 sectoral and thematic schemes that were launched in the month of June, and all of those schemes put together have seen inflows of close to 13,000 crore rupees. So more than half of the inflows into the sectoral and thematic category have been on account of the new schemes that have been launched, and these have been launched by the likes of Aditya Birla Sun Life as well as Quant, Baroda BNP. You have the Helios Financial Services Fund, Kotak Special Opportunities Fund, the manufacturing fund from Mahindra Manulife. You have the Quant Fund from Motilal Oswal. You have the Samco Special Opportunities Fund, as well as the SBI Automotive Opportunities Fund and the White Oak Capital Special Opportunities Fund. So quite a few in that category are being launched right now. I want to talk about the outflows from the fixed income space as well, and that is to the extent of 1 lakh crore rupees. A large part of those outflows have come in from the liquid fund category. This is, of course, for the month of June. It is the last month in the quarter, and generally in the last month of the quarter, you will see overnight funds and short duration funds see an outflow. I'm wondering if I have my guests logged in so that we can take a few questions to them. All right, but I believe that we have Niranjan Avasthi, Senior Vice President at Edelweiss Mutual Fund, joining in. Niranjan, I know that I got you on to talk about the business the business cycle fund. We will get to that in a bit, but I'm curious what you think of the numbers, and we're waiting for the SIP number to come through. And if anything, that's going to be a heartening number to see as well. But inflows of over 40,000 crore rupees once again, but a large chunk of this coming in the form of NFOs. Your initial reactions?
Right. So, thanks for having me. Glad to be here. Of course, these numbers are increasing month on month. And over the last 2 years, we have seen inflows, especially in the equity funds coming from retail investors, only shows the confidence in India growth story and mutual fund as a product. This is not surprising because half of this inflows is coming through SIPs, and maybe half of this is coming through NFOs and multiple launches. I think so. And I've traveled a lot over the last couple of weeks, and I'm listening to investors and distributors. I think so. Everyone is very, very positive on the India story, and they believe that this is a period to make returns in equity. Of course, in some pockets there are risks, but broadly, I think so. People are very, very positive and want to participate in the India growth story, which is reflecting in all these numbers, especially on the thematic fund. That's quite surprising because within thematic also, a lot of money is chasing some narrower sectors, and which is surprising at the same time also worrying because in sectors you need to get your entry and exit right. If you are investing, if you don't get it right over the long run, many of these sectors give you returns that are closer to benchmark or broader market. So it'll be interesting to see how people are timing their entry and also later on time their exit from these sectors when it comes to booking their profits or getting into some other themes or sectors. So
I'm actually curious what you have to say about this as well, because we are talking about a scheme that you're launching in that very category. But before we get into that, I'm looking at a lot of mutual funds that are launching thematic funds as opposed to sectoral funds.
yes.
Would you say that that is, maybe, while it still can be risky, it is not something that has as much concentration as a sectoral fund?
So it depends on within theme what it is. Generally theme covers multiple sectors, and in some cases themes like business cycle or India opportunities or special situation. These are as good as a diversified funds when it comes to sectoral or market cap allocation. However, within theme also there are some themes. If it is maybe manufacturing, they are a bit narrower compared to these other schemes. And when it comes to sectors, of course, sectors are much, much narrower because the universe in which you invest is very narrow. And the opportunities to pick up stocks in that sector is limited compared to a theme. So within thematic and sector, we can segregate in three categories, if I may so. One is broader thematic, which is like business cycle or India opportunities, which are as good as diversified fund, can be part of your core portfolio. Then there are narrower themes, whether it is manufacturing, whether it is technology or something like that, or innovation. And then there are narrower sectors, which are maybe defense or likes of that.
That's a fair point. But even in the manufacturing theme, or if you're talking about a BFSI theme, whereas previously, Niranjan, when you were trying to select as a fund manager, if you're trying to select stocks that would fall into this basket, it would be pretty narrow. But now you're looking at, say, for a BFSI, you're looking at general insurance, you're looking at reinsurers, you're looking at life insurance, you're looking at brokers, you're looking at capital market players. Is it easier then?
It is because the Indian market is expanding, and each of these segments, like BFSI, is one of the largest segment in terms of weightage in the overall market, and also number of opportunities out there. And even we represent mutual fund industry. There are a couple of players that are listed, many more to come. Within brokerage also there are a couple of players listed, but it is a vast part of the industry. So this universe is definitely expanding, and BFSI is a case in point where you can see a large number of stocks and businesses getting listed across various segments within BFSI. Manufacturing is also one because of India's focus on manufacturing, government reforms in that area. This universe is actually expanding. So yes, these are one or two themes where the themes are very broad and universe is also available.
Okay, there's one thing that I have looked at, Niranjan, over the last couple of months is, and I've not gone further back, I'm looking at the month of June, index funds have seen inflows of over 5,000 crore rupees. You have other ETFs which and by the classification I'm understanding also includes your equity ETFs, is 9,000 plus crore rupees. It's quite substantial and it's a growing number. What does that tell you?
So definitely passive funds are getting more popular, and as a percentage of incremental flows, their share versus active fund is gradually increasing. But if you put it in context of overall inflows of maybe 45,000 crore, it is small, but yes, growing very, very fast. Within that, especially in the index funds, we have seen people coming in, investing, setting their SIPs, and now passive is slowly becoming a part of people's core portfolio. When they pick a scheme within a category, usually people are preferring one active and one passive, especially in the DIY kind of setup. People are relying more on index funds and passive funds. So it's heartening to see, but I think it's a long way to go for passive, because active is also doing well in India, and there is yet to be a lot more alpha to be made in that segment as well.
Not too much to comment on with regard to the outflow from fixed income, right? Niranjan, we're talking about June numbers. It's an outflow of over 1 lakh crore rupees, but all of this is, primarily in the overnight space. Is there money, in your opinion, that is shifting out of some of these schemes and into hybrid, into arbitrage funds? Is the smart money moving there?
Yes, within fixed income, this is typically a seasonal phenomena where quarter end, especially June and March quarter end, you will see a lot of outflows. Specifically, you rightly pointed out in the overnight and liquid segment. Apart from that, I think so people are preferring maybe hybrid funds or even equity funds over pure debt funds because of change in taxation. So clearly the risk on is so much that people are broadly looking at a mix of equity or maybe hybrids for their investment needs, while short-term money is still going in FDs or maybe short-term debt funds. But in the medium to long, I think so in debt funds, there is very little inflows from retail and HNI segments, specifically after the changes in taxation in last year.